I know with confidence that US dollar is going to be strong this period because of fundamental analysis. It is fundamental analysis that actually give us the overall direction of the market. Yet, many beginner forex traders do not know this, and I do not blame them. To trade with fundamentals is very difficult. If you go on YouTube, you will find out that many persons do not know how to use the fundamental analysis. That is why a lot of YouTubers claim to be experts in technical analysis. When you observe, beginner forex traders tend to trade forex like gambling. Look at the chart, place one trade, the trade goes against them, they place another one and keep taking another trade. Within just a single day, they will take up to 10 trades, and this will lead to a lot of losses, trading with emotions, and at the end of the day, they are frustrated and they begin to blame forex trading. In this program, I have made a very simplified course of fundamental analysis. The important things that you need to pay attention to. Just within 15 minutes, you will know. There is one important thing that when you understand this factor, you will be able to tell exactly where every currency pair is going within the shortest possible time. So I want to beg you to take out just 15 minutes of your time as an investment to understand the importance of fundamentals, as it is going to change the totality of how you trade forex. This will give you more confidence. We'll be looking at GDP, manufacturing PMI, inflation, interest rate, unemployment rate, hedge fund sentiment, and notable events, especially the Israel-Iran conflict, how it affects trade in this period. When it comes to GDP, if the GDP of a country is growing compared to other countries, it means that the particular currency will be in high demand, and that will cause the value of the currency to appreciate. Now, looking at GDP here, you see that United States has a GDP of 3.4, whereas the other 7 currencies, the major traded currencies here, the GDP is low, very low compared to the United States. So United States dollar is strong currency based on GDP. Now look at Switzerland, has a GDP of 0.3. The previous was 0.3. Japan has a GDP of 0.1%. It's a slightly increase from minus 0.7 to 0.1%. Australia has a GDP around 0.2. New Zealand has a GDP in the negative, minus 0.1. Previously it was minus 0.3. So technically New Zealand is in a recession. Then we have Canada. The GDP appreciated a little from minus 0.3 to around 0.2%, while the GDP of Great Britain dropped from minus 0.1 to around minus 0.3, and the Eurozone had a slight increase in GDP. Based on economic growth, United States is well positioned. Switzerland, though, is not as good as the United States. Canada had a slight increase. Great Britain and New Zealand are in the negative, including the Eurozone. When it comes to the manufacturing PMI represents Purchasing Managers Index. Actually, this PMI data actually is a data that is gotten from the top manufacturing companies in each of these countries. When the PMI data is above 50%, it shows that the economy is growing. We are expecting expansion in the next 1 to 3 months. If you look at US has a PMI data, manufacturing PMI, that grew from 47.8 to 50.3, showing that the US economy is entering an expansionary phase. For Switzerland, they had a slight increase in the manufacturing PMI, but it is still below 50%, showing that Switzerland is in a contractionary period. Japan also has a contractional PMI, showing that in the next 1 to 3 months, Japanese economy will not be growing as much. Australia, New Zealand, Canada had a slight increase in their PMI, but is still below 50%. Great Britain has got a PMI data that is 50%, a slight increase from 49.9% to 50.3, almost at the same level with the United States. So we're expecting that there should be economic growth in Great Britain. The Eurozone, we are seeing manufacturing PMI below 50%. When it comes to PMI, the strong economies are the US and the Great Britain. Inflation, here on the screen you can see the chart of the CPI data for the 8 top forex economies. United States have their inflation CPI grew from 3.2 to around 3.8. There's a point I need to emphasize here. The major central banks listed in these currencies, they like their inflation data to be at 2%. At 2%, inflation will help in economic growth, because there cannot be economic growth without inflation. But when inflation goes beyond 2%, it is a threat to the economy. So the central bank will do everything in its power to bring inflation back to 2%. Inflation is below 2% and is going down, it will lead to deflation, and deflation does not help in economic growth. So central bank will do everything in its power to bring inflation back to 2%. Having said that, you can notice here that in the United States, the inflation is around 3.8. It shows that inflation is growing away from 2%. So the central bank is forced to not cut interest rates. They are observing. When Jerome Powell spoke during his interview on the 16th of April, he said that inflation has been stubborn. It's not coming down as expected. So that will make the Federal Reserve Bank to take more time to study the data before deciding to cut on interest rate. But in Switzerland, you can see that inflation is below 2% and is dropping. What it means technically is that the Swiss National Bank will be forced to inflate either by cutting on interest rate or by buying government bond. Japan has their inflation dropping towards 2%. The central bank should be observing. They are not forced to inflate or to increase interest rate at this moment, although we are expecting Bank of Japan policy statement. All right, so a lot of people are speculating that they might increase their interest rate or they will cut on interest rate. Let's watch out. Australia has inflation that is far above 2%, but the data shows that the inflation is coming down towards the 2% mark. In New Zealand, it is almost the same case with Australia. The inflation is tending towards 2%. In Canada, we have a peculiar situation where inflation is currently at 2%. For the past 3 months, it has been significantly dropping towards 2% and is currently around 2%. So the central bank might be forced to cut interest rates so that inflation will not drop significantly. In Great Britain, you can see that inflation is also dropping towards the 2% mark, but it's not yet there. Then Eurozone is very close to the 2% mark. The closer that the central bank is to the 2%, okay, the more relaxed they will get, and the more easier for them to cut on interest rate. But at the same time, if their GDP data is showing that there is no economic growth, they will even be forced to cut interest rate quicker. This other inflation here is for Nigeria. Nigeria is my country, and I do this to track the level of inflation in Nigeria. I have arranged a total beginner course. I'm going to teach you from beginners to advanced trading methodology for just $60. For just $60, you'll be able to access this course for 2 months. I will take you from complete beginner to advanced trader. Now, if you check the description, I have dropped a link, a paystack link for the course. It's just 60,000 naira. You'll be able to join us. Okay, so when you click on that link, make your payment. And if you are not within Nigeria, also arrange the USDT. You can pay for the course using USDT. The next thing we have is interest rate. Different central banks, the United States, Australia, New Zealand, Canada, Great Britain, and the Eurozone are waiting to begin an interest rate cut. They're waiting for the first of this central bank to cut their interest rate. But if you look at it very well, United States is the only country among all of them that their inflation level is increasing rather than dropping. So United States is in a better position, and they also have strong GDP. So they are in a better position, have enough chance, enough opportunity to not cut interest rate anytime soon. New Zealand, as you see in their GDP, they are almost in a recession. What can they do to come out of it? They might be forced to cut on interest rate in order to cause the economy to grow. You also see that situation in Great Britain. Canada is almost at 2%. So they are also in a position where they can cut interest rate. So when it comes to interest rate, I feel like the United States dollar is going to be stronger for a longer period of time, unlike this other one. Switzerland has begun interest rate cut from 1.7 to 1.50%, while Japan slightly increased their interest rate from minus 0.1% to around 0.1%. You can also observe when it comes to unemployment rate. The central bank has two major responsibilities. Number Number one responsibility is to stabilize price of goods, and that means they are to control inflation. The second responsibility is to bring up policies that will result to maximum employment for their citizens. When you look at United States, their unemployment rate slightly dropped from 3.9 to 3.8. Switzerland, there was also a drop in unemployment rate. In Japan, there was a slight increase. In Australia, a slight increase. If there is unemployment, what do you think they will do? They will try to take actions that will cause more employment to be created. In New Zealand, unemployment rate grew from 3.9 to around 4.0. In Canada, it grew from 5.8 to around 6.1. In Great Britain, it grew from 3.9 to 4.2. Then in the Eurozone, it went from 6.4 to 6.5. When it comes to unemployment, US, you can see that US is also well positioned, and that can cause the US dollar to be strong for a longer period of time. Japan and Switzerland are also in a relaxed position. Australia, New Zealand, Canada, Great Britain, and the Eurozone, they are in a position where they need to take action to create more jobs. On the agenda is hedge fund sentiment. I like to track the positions of hedge funds because hedge funds are the institutional traders whose major focus aligns with retail traders. Their responsibility is to speculate on different currencies and make a profit. Now, when you look at the United States, hedge funds have been selling the United States dollars massively in the past months, from minus 35.1% to around 39.7%, and currently last week their data came out at minus 42.8%. They are also selling the Swiss franc, they are selling Japanese yen, Australian dollar, where they were buying the New Zealand dollar. For Canadian dollar, the hedge funds have been selling it, and they've been buying the pound, although their positions for the pound dropped significantly from 21.6% to around 12.6% last week. And for the euro, they are slightly selling the euro. Their current net position is minus 3.3% sell. But there is something you need to know when it comes to the hedge fund sentiment. If you look at their overall data over time, you will see that whenever the hedge fund sell United States dollar towards 40% mark, it usually point to the lowest level. Okay, so at that point, they will begin to think of reducing their sell positions. And if hedge funds are going to close their US dollar positions, it will cause the US dollar to strengthen. So you need to note that. In other words, the US dollar is well positioned. And when US dollar is well positioned, what does it? Is signaling a risk off scenario. Okay, we will handle that when we get to the next point. There are notable events that we are expecting this week. On Tuesday, April 23rd, 2024, we will be expecting the flash manufacturing PMI data. This is what will move the news. Flash manufacturing PMI for Germany, France, and the United Kingdom. Then on Wednesday, April 24, Australian CPI. The CPI data for Australia will be one of the news that will move the market this week. Then on Thursday, 25th of April, we'll be looking at US advanced GDP data and unemployment claim. While on Friday, April 26th, the Bank of Japan policy statement and US core PCE price index are some of the notable events that you should not miss this week. Finally, there is a little comment on Iran versus Israel conflict. You have heard in the news that Iran, they decided to hit Israel, to send a missile to Israel, and Israel decided to respond by sending their own bombs to Iran. This actually means that there is a conflict in the Middle East. One of the reasons why the United States dollar has to be strong this period is because of the Iran versus Israel conflict, right? Because we are currently in a risk-off scenario. Whenever there is risk of money flow away from high-risk assets, all those assets with high interest rates like the New Zealand dollar and Australian dollar, money leaves those kind of currencies and flow towards the United States dollar, because the United States dollar is one of the safest currencies in the world, and it is the world's main foreign exchange reserve for different countries. That means the United States dollar is going to be strong this period. And if you you look at your chart, you can see it from different charts. Price of gold is dropping due to the conflict. If you look at the New Zealand dollar, we saw a slight fall. This period, the Swiss franc and Japanese yen are responding to the conflict with gaining a little level of strength, although fundamentally, based on the macroeconomics, these two currencies, the Swiss franc and the Japanese yen, should be weak because we are in a risk-off period. People do not want to put their investment in high-risk assets, all right? So that is conclusion. Based on everything that we have done, the United States dollar is strong this period. And when you go and start looking for trading opportunities, especially as swing traders, you should be looking for a way to capitalize on the strength of the dollar. By tomorrow, I will be dropping some free signals for you. So come back to the channel and hopefully you will get that.